Good morning, good morning, good morning. It is Monday, August 29th, and we are seeing more declines after a very hawkish Fed on Friday. So, what was so hawkish about it is Jay Powell came out and said, look, we have got to keep raising interest rates. We do not yet know if we've seen a peak in inflation. And regardless of that, that we need to basically hold down the throttle on those interest rates. And the market said, not sure we really like that, considering not that long ago, the bond market was pricing in the potential for a rate decrease coming next year, and some just wet blanket thrown on that. That being said, it does seem like the Fed moves on a dime, right? They change their opinion so much, but they are waiting on the next set of data. So the end of this week, Friday. Don't forget, 3-day weekend. So Friday's probably going to be a pretty light day as we go into Labor Day. It is the last weekend of summer, for all intents and purposes. And there will be a lot of people taking off on Friday for the long weekend, and then of course we have Monday off. But this Friday we still get those monthly job numbers from last month, and I would expect that we might see the administration come out and say, well, it's not going to be as great of a report as last time, because last time just blew everything out of the water. And the problem with that is when it did that, it really took the market by surprise. Well, with that large number, it just kind of lends itself to the next one has to be smaller. We have to start tightening a little bit on that, because there's only so many people looking for jobs, and there's only so many jobs open. And there are still actually more jobs open than people looking for jobs, but they're not a match, right? So if you're in technology, you're not going to go over to advertising or whatever. You know what I mean? So there's just kind of a mismatch in jobs. But September will probably bring that down anyway, and then we'll start gearing back up as we move closer into the holidays, and hopefully we'll have a better holiday season market-wise. Okay, but all that aside, I think this week is just going to be interesting, and then we get CPI data out. In September, we'll get the August read, and then at the end of September, we have the Fed meeting and rate decisions. So a lot going on. So let's kind of unpack a little bit of this. There's several patterns that can be playing out here. So this is the SPY futures, and you can see here that we continued this move lower. But we are right at a trend line. So you'll see when I pull up the SPY chart why this trend line is here. Because it doesn't really look like maybe it's that big of a deal. But on the SPY chart, you're going to see a gap here, right? We don't see gaps in the futures charts. But here, we will see a gap on the SPY chart, and then it comes back in. That was resistance. Resistance became support. Where are we now? We did tap the 50 on the futures. Is this going to be where we kind of head out? It does set us up for a nice little technical bounce. Now, this could just be another bear flag that may play out over the next day or so. Or we just could continue falling down. But I think we might find some nice support here along the 50. That's also run along the 400 of SPY. And let's go ahead and pop over and look at that. All right, and again, this is all just on technicals. Excuse me. Our next gap down here is way down here, so I'm not as concerned with that as I am with the 50. And this is the gap I was talking about. So in there's actually a couple of gaps, but this is the gap I'm talking about. This is the initial gap that we gave way right along a fib line, very close to a fib line. And when we open up this morning, we are going to be right here, and you'll see that right. So that's that line, but we've used it almost perfectly. So I would go ahead and draw that in. That's right at the 401 area, and see if that holds. But really, like 401, 400, 401, that area is the area I would watch. And then our next below would be the 50-period moving average, which is at 398.56. So those are all we have in this kind of smaller 5-point area, we have some really good support again, for a technical bounce, right? Not saying that we're going to go ahead and make a big U-turn or anything like that. But I think the Fed just really surprised a lot of us with just how hawkish they were, considering how how dovish they have been. Okay, so this is the weekly chart. Few things, again, we're going to talk about this. Few things playing out. We could have an inverse head and shoulders potentially playing out, or a little bit, or the opposite. We could have a head and shoulders. This would be the head. This would be the left shoulder, which means we would come down a bit and then come back up and down. So that pattern is a little less mature than the inverse, because we already have the head, the left shoulder, the head, and then this would be a right shoulder for continuation up. And again, we're still waiting. You can also make a larger term case for an inverse head and shoulder on this one as well, if you want me to draw that in real quick. So this could be a shoulder, this could be a shoulder, and then that means this one would then be a shoulder as well. But we don't know. All these patterns are in progress. They aren't confirmed until they're completed, which is kind of annoying. But you can kind of see them both setting up. So keep your mind open to both. Don't have a bias one way or the other. We are seeing a rise in, let me get rid of this real quick. We are seeing a rise in oil. The OPEC meeting, I guess they're going to go ahead and cut to make, there's such a pain in the butt. They're going to go ahead and talk about some cuts that they're going to make, but we're moving into winter. So, like gas is actually, so like natural gas, things like that, that is actually going to become higher demand. And then overall, just some higher demand in general, especially if we can get China to actually open up. Another thing weighing on tech stocks today, I think is that in Shenzhen, they closed down the largest electronics plant for COVID. They've shut it down. That is a very just heavy weight on the market. So keep an eye on that. Also, we have the U.S. dollar at highs. What does that mean? Well, that is, although it sounds like it's really good if you're traveling, it's probably pretty good because your dollar is going to go a whole lot further, but it makes goods a lot more expensive, and it's weighing on gold, and we'll take a look at that here. Gold is definitely not benefiting from that stronger dollar, right? So just some overall market themes to watch. And Bitcoin, another slide, fell out of the little range it was in. So we're going to continue to watch this 18.5. I really like around 18. If we can test that a couple of times, I think 18 to 18.5 is a pretty good support area overall in Bitcoin. So, okay, all that aside, what am I watching today? Honestly, I'm going to be watching oil names. I'm already in Oxy, and we'll look to maybe add to this. It is a little bit red this morning, but overall we're seeing a much larger potential bull flag set up on oil names. And I did mention Chinese names. Pinduoduo reported, and you're going to see a very big turnaround in this. So keep an eye on some of those Chinese names for some day trades. But for the most part, we'll see if support holds. So we don't want to run in and buy a bunch of puts, because if support holds, well, there's not that much room to the downside. But I don't want to load up on the long side either. So I'm just going to kind of wait and see how the market plays out, see if we catch some of these spots. Like I said, for a technical bounce, look more for a day trade today, and then take a look. But watch Pinduoduo, Baidu, KWeb, Net, and JD. So Net and JD are actually a little red here right now, but the others looking pretty good. So, all right, that is it for me here this morning. If you have any questions, reach out. Heather C. at givingtruetrading.com.